Hello guys, myself Anshuman Jaiswal welcome you all in my Commerce Gateway classes. In our previous video, we have understand the methods used for calculating depreciation and the differences. Hope so it is clear to you. In our today's class of depreciation accounting, we will be dealing with practical problems based on straight line method for depreciation accounting. So let's get started. There are two conditions. There are two conditions two conditions followed while calculating depreciation for straight line method. Straight line method. Now, what are those conditions? Our first condition, that is condition number 1, is when rate of depreciation is not given. When rate of depreciation is not given, then what circumstances should we do to solve it or to calculate the amount of depreciation? And condition number 2, when rate of depreciation is given, then what we do in this? So these, under straight line method, we have to study two conditions: when rate of depreciation is not given and when rate of depreciation is given. In today's lecture, we will be only dealing with condition number 1, when rate of depreciation is not given. So let's get started to our practical problems of condition number 1, when rate of depreciation is not given. So we'll take a practical example. We will do 3 practical questions based on condition number 1. So condition number 1, rate of depreciation not given. Now question number 1 based on this condition. For example, X Limited purchased second hand machine for rupees 70,000 on 1st of April 2012. Second, spend rupees 15,000 on erection and rupees 15,000 on installation charges. Next, estimated scrap value rupees 10,000 and life of the asset is 9 years. Life of the asset is 9 years. Prepare asset account or machine account till 31st March 2015. As you can see in this question that the rate of depreciation is not given. First, before solving, let me tell you one thing. When rate of depreciation is not given, then you can apply the formula for calculating depreciation. And the formula for calculating depreciation, as told in the theoretical classes, is annual depreciation. Annual depreciation is equal to cost of the asset, minus estimated scrap value divided by estimated life of the asset. As you can see, in this question rate is not given, so we have to apply the formula for calculating annual depreciation. Now in this question, as you can see, the cost of the asset, the cost includes the purchase price of the asset, purchase price plus other expenses, purchase price plus other expenses. Now purchase price 70,000 and other expenses include 50,000 erection, 15,000 erection and plus 15,000 installation charges. You can write here in short form, that is erection and installation charges. Now when you will total these all, you will get the original cost of the asset, that is 1 lakh. 70,000 plus 15,000, 85,000 and 85,000 plus 15,000, that is 1 lakh. So we get the cost of the asset 1 lakh. So we can write here cost of the asset 1 lakh minus estimated scrap value will be 10,000, that is already given in the question, 10,000. And what is the life of the asset? The life of the asset is 9 years. So we get 90,000 here, divided by 9, it will be 10,000. So the amount of depreciation we get is 10,000. So when rate of the depreciation is not given, then we can calculate it by the formula, and through this we get the amount of depreciation. Now we will treat it by preparing an asset account. Let us see its calculation. You can take the screenshot of the question and you can copy it. So let us prepare an machine account. So machine account, as the format I have also discussed in the previous lecture. So you have to write a date, draw the line by scale, particulars, amount, date, particulars, amount. Since the format of the asset account is ready, debit side, and here it is credit side. Now we will deal the questions. Since we are purchasing a second hand machine on 1st of April 2012, 1st of April. So we have to write here two bank account. Since we are purchasing the machine and we are making the payment through bank, as we studied in ledger account that the bank account will be debited. So we are purchasing the machinery at cost price, that is cost price is 1 lakh. So we have to write here 1 lakh. Now for 1 year the depreciation charge 2013 31st March by depreciation account for 1 year. As we have calculated, the amount of depreciation is 10,000 and it will be constant year after year since we are applying the straight line method. So the amount of depreciation will be 10,000 and the balance carried down will be 1 lakh minus 10,000. It will be 90,000. Now we will close it, we get 1 lakh. Now this balance will be carried down next year. This balance will be brought down in the next year, that is 2013, 1st of April, to balance BD, that is 90,000, as discussed in the previous lecture, that how it is done. Now again 1 year depreciation will be charged, 2014 31st March by depreciation account. Again it will be constant since we are applying straight line method, and the balance carried down will be 80,000. So 90,000 here and 90,000 here. Again next year the balance carried down will be brought down. So 2014 1st of April to balance brought down. Now it will be 80,000, and after 1 year again the depreciation will be charged 31st March by depreciation account 10,000. Again it will be constant since we are applying straight line method, and the balance carried down will be 80,000 minus 10,000, that is 70,000. So our question here gets completed, that we have in the question it is asked that prepare the machine account till 31st March 2015. So we have prepared it, and the balance is 70,000. So this balance will be carried 2015 1st of April to balance BD, that is 70,000, and our question gets completed here. Hope so. Question number 1 is clear to you. Now moving on to our next question based on condition number 1. So we are taking next question number 2. Now question number 2, condition number 1. Now first of all let me check the question, that what is the question actually given. In this question it is saying that Y Limited purchased plant of rupees 45,000 on 1st July 2014 and spent 5,000 on freight, that is expense. Scrap value is 10,000. Next, life of the asset is 4 years. Prepare plant account from 1st July 2014 to 31st March 2018, and books are closed on financial year. Now in this question as the question is quite similar to question number 1, but there is a difference of date. What is the difference of date? That we are purchasing the plant on 1st July 2014, and our previous question we have purchased the plant on 1st of April 2012. So the month difference is there, so you have to be careful and calculate it very clearly. And books are closed in financial year. Let me tell you one more concept with regard to it, that accounting year is of two types. Accounting year is of two types. That is, one is calendar year and other is financial year. Now, what is calendar year and what is financial year? Calendar year, as it is given in your calendar, that it starts from 1st of January and ends at 31st of December. This is calendar year. And what is financial year? Financial year is of 1st of April and ends on 31st of March. So most of the companies or most of the business enterprises follow financial year, not calendar year. So you have to be careful that in the question which year is given, when the books of accounts are closed, and whether it is financial year or whether it is calendar year or whether it is any year, April, March, any year. So you have to be very particular or calculative about it. So let's get started to our question. So we are going to solve it, but before that, rate is not given, so we have to apply the formula for calculating depreciation. Now, what is the formula for calculating depreciation? That is, annual depreciation is equal to cost of the asset minus estimated scrap value divided by estimated life of the asset. In this question, the cost is 45,000 and its expense is 5,000. Scrap value is given in the question 10,000 divided by life of the asset 4 years. So by solving this, we will get our annual depreciation or the amount of depreciation. So it will be 50,000 minus 10,000 divided by 4. It will be 40,000 divided by 4. Again, it comes 10,000. So amount of depreciation is 10,000 and it will constant till 31st March 2018. Now we will prepare a plant account and we will try to solve the question. You can take the screenshot of the question and you can copy it in your register. Now I am going to erase it and we will start our solution. Now, again, plant account, debit aspects, credit aspects, date, particulars, amount, date, particulars, amount. Now, when we are purchasing the asset or when we are purchasing the plant, we are purchasing the plant on 2014 1st of July. So to bank account, and what is the cost of plant? It will be 50,000, 45,000 and plus 5,000 expenses, so total 50,000. Now in next year we will calculate the depreciation. So books of accounts are closed on 31st March every year. So 2015 31st March by depreciation account. Since we get the amount of depreciation 10,000, that is annually, Now we have to not calculate of annually, because the we are not purchasing the plant on April, we are purchasing the plant on July. Now from July to March, how much months it will be? The amount of depreciation 10,000. July to March, July, August, September, October, November, December, January, February, March. So 9 months depreciation will be calculated. So we get 3, 4, 2,500 and 7,500. So we get the depreciation, that is 7,500 for first year, and the balance carried down will be 50,000 minus 7,500. It will be by balance CD. 50,000 minus 7,500 is 42,500. Now the amount will be closed. Now the balance of plant carried down will be brought down in the next year, 2015, 1st of April, to balance BD, 42,500. Now the depreciation calculated will be on the amount 10,000, not 7,500. Now we have brought down balance in April, and for 1 year the depreciation charge will be 10,000. So 2016, 31st March, by depreciation account 10,000. Again the balance carried down will be 32,500. 31st March, 42,500. Again 2016, 1st of April, to balance BD, it will be 32,500. Again next year the depreciation charge, 2017, 31st March, by depreciation account 10,000. Again the balance carried down will be 22,500. Again the amount will be closed, 32,500. 32,500. Again in 2018, 1st of April, to balance BD. So the balance carried down will be brought down in the next year, that is 22,500. Now again in 2019, 31st March 2017, it will be 2017, and it will be here 2018. So 31st March, by depreciation account. Again the depreciation amount will be constant, 10,000. Again balance carried down will be, by balance carried down will be 12,500. Again the amount will be close, 22,500. 22,500. 22,000. Now again 2018, 1st of April, to balance BD, and the final our balance came is 12,500. So this was all for question. So till 2018 31st March we have to prepare the plant account. Hope so the question is clear to you. Now we will moving on to the last question, and that is very typical question based on condition number 1, but it will solve very easily. Okay, so let's get start to our question. Question number 3. So question number 3, it is very long question but very easy to calculate. Now let me see the question, that what it is. The question is telling that on 1st of April 2015, Hero Limited purchased bike. Hero Limited purchased bike for rupees 68,000. 68,000. Life of the asset. Life of the asset 10 years. 10 years. And fetch value. Fetch value is rupees 8,000. No, it will be rupees. Fetch value will be 8,000. Yes. Next. Now 68,000. Yes, it is 8,000. Fetch value is also known as scrap value. So no need to bother and no need to worry that the fetch value, what is the fetch value? It is just a scrap value. Now condition number 1. Condition number 2 of this question is on 1st of April 2016, Hero Limited, again this company purchased additional bike of rupees 40,000 and life of the asset is 20 years. Life of the asset is 20 years and residual value is rupees 4,000. Now third question, that is third condition of this question is 1st of October 2017, Hero Limited, this company only, purchase one more bike, additional bike of rupees 9,800. Life of the asset is 20 years. And breakup value is rupees 800. Now the question is asked after that, prepare bike account for 4 years and books are closed on 31st March every year. 31st March every year. Now, whether the question is fetch value, if it's a residual value, and if it's a breakup value, both these terms are same, as it means that scrap value. So let us try to solve this question, that how it will be get cleared. So first of all, again the rate is not given, so you have to apply the formula. So first let me apply formula for all 3 years. So annual depreciation for first year, it will be cost minus estimated scrap value divided by life of the asset. So cost of the bike is 68,000 minus scrap value of fetch value 8,000 divided by life of the asset 10 years. So 60,000 divided by 10. So the annual depreciation will be 6,000. This is for first year. Now annual depreciation for, it will be 6,000, I'm writing over here. Annual depreciation for second year. The annual depreciation will be 40,000 minus residual value, that is scrap value 4,000 divided by 20. Now the life of the asset is 20 years. So we get 36,000 divided by 20, that is 1,800. Okay children? And in third year, the annual depreciation calculated will be what? No, it will be 9800 minus 800 divided by 20. So 9000 divided by 20, it will be 450. So now these annual depreciation for 3 years we have calculated. Just we have to prepare the account and settle the amount. So for first year, as I am writing over here, 6000, 1800 and 450. Now let me prepare the account and show it to you that how the treatment we can clear it. Now again, bike account, debit side, credit side, date, particulars, amount, date, particulars, amount. So first machinery we are purchasing on which date? 2015, 1st of April. Now we are purchasing the machinery on 1st of April 2015. So what is the amount? Amount is 68,000. So the bank account we are making the payment of rupees 68,000. Now for 1 year the depreciation charge 2016 31st March by depreciation account. The depreciation as we have already calculated here, as you can see, 6,000 for first year. Now by balance carried down. The balance carried down will be 68,000 minus 6,000, it will be 62,000. So 68,000, 68,000. Now again this balance carried down will be brought down in the next year. 2016, 1st of April, to balance brought down. It will be 62,000. Now again in next year, in same year, that is 2016, we are purchasing one more bike. That is, so again we will write here to bank account. Since we are purchasing, so we are making the payment through bank. And what is the cost that we are purchasing? We are purchasing at rupees 40,000. 40,000. So in next year 2017, that is 31st March, by depreciation account. Since we are applying the straight line method, so the depreciation charge for the first machinery will constant, that is 6,000, and we have purchased another machinery of rupees 40,000. So the depreciation calculated will be also constant. So the depreciation we have calculated here is 1,800. So again the total depreciation calculated will be 7,800. So the balance carried down will be 62,000 minus 6,000, 56,000, and 40,000 minus 1,800, 38,200. 38,000, 10, 8, 2, yes, 38,000. So total we get it 200 here, 6, 8, 14 here, 94,200, 8,000, 12, 10. Okay, so the total we get here 1,02,000 here, here also 1,02,000. Wait, there is a mic. No, it is okay. Now again in next year 2017, the balance carried down will be brought down. To balance brought down, that is 56,000, 38,200 and in the same year, that is in 2017, we are purchasing another bike, that is on 1st of October, to bank account, that is 9,800, 94,200. Now again the depreciation calculated will be for first two machines will be constant. So 2018 31st March by depreciation account. First machine 6,000, second machine 1,800. Now there is a change in the third machine. The third machine we have calculated annual depreciation of 450. It will not be 450. It will be of just half of it because we have purchased the machine on 1st of October, and from 1st October to 31st March the depreciation calculated will be for 6 months. So 6 months will be just half. As you can see, 6 months, 6 by 12, 1 by 2, it will be 2 to 5. 2 to 5. The total we are getting is 9,225. 7,800. Let me check. 225. 8025. It will be 8025. And let me see that what is the balance for the asset. So by balance carried down. So the balance carried down will be 56,000 minus 6,000. It will be 50,000 first year. Second year 38,200 minus 1,800. It will be 38,200 minus 1,800. 36,400. 36,400. And third 9,800 minus 225. So 9,800 and 225. It will be 75. 725. It will be 9,575. Let me total it and see that whether it is coming or not equal to it. So it will be 50,000, 86,400 and 9,575. 9,575. So it will be 5, 7, 9, 95,975. And this is equal to 94,200, 94,200 and 9,800. 9, 4, 13, 1, 14, 1 lakh 4,000, and this will be equal to 95,975, 8025. So this 4, yes, 1,04,000. 1,04,000 here and 1,04,000 here. Since I am doing the calculation in these all in the account only because the space is not there, but when you will do your calculations, you have to prepare a separate working notes for it, which is prepared just after the asset account. Now the question is asked to prepare the asset account till 4 years. Now we just prepared 2015, 2016, 2017. This prepared just for 3 years. Now one more year we have to include it. So let us include it, and it will not take much time. It's 0 to 5. It's better to calculate it here only. Date, particulars, amount. So 2018, 1st of April. Now the balance carried down will be to balance BD. So the balance BD will be 50,000 first year, second year 36,400 and third year 9,575, and the total we get is 95,975. Now, what we will do in this question? We will just have to write the depreciation, the balance of depreciation, that is 2019 31st March by depreciation account. So first year depreciation charge will be constant, second year depreciation charge will be constant. Now in third year we have charged the depreciation account at half months. Now we will calculate it at full months. So the full month will be 450. Now you can calculate the total amount and we get 7,800 and 450. It will be 0, 5, 8,250 and the balance CD carried down will be 50,000 minus 6,000, 44,000, 36,400 minus 1,800. Let us subtract. What do we get? 36,400 minus 1,800. 34,600. 34,600. And third, 9575 minus 450. 5 to 9,125. 9,125. So let me total that. We will get the balance of asset 44,000, 34,600. It would be 600 here, 8 here, 78,600 and 9,125. 87,725. We get our balance of asset. So hope so this question is clear to you. This was all for today's video. So condition number 2 we will study in next class. So till then, thank you, stay safe and have a nice day.